So I wanted to get sort of a fundamental take, which would be me, and the technical take, which would be you. So the sort of the headlines that got the sell-off going last week, of course, were the 85% margin increase for silver, which is what I heard just was worried it was going to trickle down to all the markets, especially oil, which has also been really volatile. We also had the death of Osama bin Laden, which basically means if you can get a bin Laden, why can't you get Gaddafi, which means that maybe there aren't such big supply issues. And then something else that didn't get a lot of attention was that manufacturing activity in the EU and also China was kind of down a little bit last week, kind of got overshadowed, but that means that we might not see more rate hikes, which put pressure on those currencies and buoyed the dollar a little bit, which also hurt the commodities. So that's my take on this side.
That's a lot. So I'm supposed to memorize everything you just said?
Yes,
there? Okay.
absolutely.
Taking everything that you just said, I'll talk the technicals.
You talk the technicals of like what led that sell-off last week.
Well, let's break it down like spot by spot. First, there was silver, obviously. Silver had that huge parabolic move. It had that move that everyone didn't understand when it went from just, say, the 40 to that 49, 50, 50 area, which was driven by shorts getting squeezed and just the whole bubble phenomenon. And then just like you said, you raise margin requirements, you prick that bubble. Just as fast as they go up, they come down.
Wasn't oil the same kind of way with that?
Oil wasn't as extreme because it really methodically went to 103, then it went to 107, then held there, then went to 112. Silver really was the one that was just like the elevator up, the elevator down, as far as all three of those commodities. So if you want to just take a quick look at silver, just to show you a little bit of the trade here, this was that acceleration type move. This is when we were talking about not chasing silver, going parabolic, and then look at this move down. This is what happened, guys. This is what happens when you have a bubble burst. If you chase, that's why we say don't chase the excitement there. So now silver is bouncing this morning. So now we judge that commodity carnage by the type of bounce we get. Do bottom feeders really come in, or is it just a feeble bounce? So for silver, it's up a little bit. This is what my traders will be watching, or I'll be watching. This, just say, this 37 area. This starts that gap. And then typically the 50-day that we broke should be resistance. So silver's going to have massive resistance between this 38 to 39 level. That'll be a level where if you're trying to play a bounce, you sell some, and this will be an area where some traders are going to try and get short.
Well, not even that, but if
it can get there. We don't even know if it can get there yet.
I was looking at a note from Barclays Capital that said that they thought the low 30s was actually when they were going to see some more retail demand come in, so there's a lot more to fall. And also Goldman said that a 12-month forecast for silver was actually around $28.
12 months from here?
Yeah, so it going to 24, 26, then 28. Over the next 12 months. So it just means a lot more downside. Gold was about $16.90 for Goldman, and oil, they said they were, of course, we heard Friday was going to bounce off of its lows from here and go to like 104. So
exactly. So that's what you have to do right now. Get those levels. Oil resistance 102 to 106, like Goldman says. Silver resistance. I mean, gold around 1520 to 1530, just bounce off support. So know where those are, and just all of a sudden they say the commodities are back. Realize there might be a resistance, and that might be more of a sell than buy after that bounce.
All right. Thanks, Scott. That was really fun. I really appreciate it.